Hi, I'm Sudhir Mulchandani, founder of Brew Wealth. Today we have Mihir Vora with us. Mihir is the CIO of Trust AMC with a remarkable career spanning nearly 3 decades in investment. He has a proven track record across various asset classes, which includes equity, fixed income, real estate, and alternate investment funds. Welcome to the show, Mihirji. It's a pleasure to have you here, sir, today.
Thank you so much for having me. The pleasure is all mine.
Trust Mutual Funds is always known for launching some quality debt funds. But now that we see Trust is coming up with an equity fund, how do you feel about the excitement in the Trust office?
Oh, we are all very excited at the journey that we are going on. We started 3 years ago with the basic fixed income funds with a very distinct offering, and that's done very well received by investors. And now we are completing our suite, so to say, of asset classes. Of course, there'll be many more funds in the future, but asset class-wise, the equity is a dominant asset class, and we are very happy to launch the first fund from our stable.
Do you think the current market offers a good entry point for small investors or maybe new investors at the current market levels?
Certainly. First of all, we are here for the long term, so timing really won't matter in the long term, as we say, There was some froth in the micro cap, the SME space, maybe in some of the small cap space also, which in the recent few weeks has started correcting. So in the overall sense of things, I'm quite comfortable with the opportunities available in the market, and I don't think it's going to be difficult to pick stocks if the market conditions remain this way.
And why Flexi Cap at this moment, and why not any other fund, any other equity fund that you chose to start off with?
Certainly. So, first of all, this is our first equity fund, right? And we basically want to offer a product which is large in size. So, if you look at the category of mutual funds, Flexi Cap is the largest category. So, by default, since it's the first fund, you can't not be there in the largest category. So, that's one. Second is, it gives the fund manager flexibility across market caps. We've seen time and again, if you look at the last 10, 20 years of history, no one sector or a bunch of sectors perform every year.
Right.
No one market cap bucket performs every year, right? So there is always opportunities across caps, across sectors. And the crux is in stock picking. If you look at the historical data, say the Nifty 100 for that matter, in 2023, last calendar year, the Nifty 100 index was up probably about 10%, which is decent, but not that much. But if you look at the top 10 stocks in those, they would have been up by almost 100%. And if you look at the bottom 10 stocks, they would probably down by 20-25%. So there is huge scope for alpha creation by stock picking, which is what a Flexi Cap strategy allows us to do.
So Mihirji, personally, you've been managing investments for around 3 decades now. How do you find a good stock in the whole universe of around 3,000 stocks available in the market?
So, first of all, it's good that I don't have to select only one stock. My portfolio will probably about 40 to 60 stocks.
Right.
So that's a good number to choose from out of the so many stocks which are listed. But in my experience, if I look at the market cap conditions, the liquidity conditions, and qualitative filters, I would say, then there are about 900 to 1,000 stocks which I would consider to be in my consideration set. So I have 6 equity analysts. So each of them roughly cover about 50 stocks each. And that's a good enough universe to work with. Out of those, we apply our investment philosophy of growth at reasonable valuations and terminal value investing. So based on those even tighter filters, we would probably be able to pick about 40 to 60 stocks.
So out of the 250 stocks universe that you have, you'll be picking around 40 to 60 stocks for a Flexi Cap fund.
Absolutely.
Amazing. So I also saw your presentation where you mentioned about gorilla stocks. Now, can you please help us understand more about gorilla stocks with some examples?
Absolutely. So the concept of gorilla stocks comes from our investment philosophy of terminal value investing. I'll elaborate that further. But essentially, gorillas, if you look at the position of gorillas in the jungle,
right,
in the monkey kingdom and in the animal kingdom, they are rare. Okay, so they are rare, they are large or dominant, they are unchallenged. And most importantly, from our philosophical point of view, gorillas are the longest living monkeys. So they have longevity. When we talk about terminal value investing, longevity of earnings growth is very, very important. And that's how we give the analogy of a gorilla when we are trying to use terminal value investing as the philosophy.
So what is terminal value investing? How do you explain it to a 8-year-old baby?
India is a growth market, right? And within the economy, which is anyway good, growing very fast, there are always stocks and sectors which are growing even faster. So what happens is, as you try to project further for the longer term, your visibility is reduced. So you don't really want to go into a zone where you don't have visibility. It's not your comfort zone. So you would either not project it, or you would put a moderate or a conservative number. So typically, if you see for high growth segments, for example, let's say the company is expected to grow profits by 30% in the next 2 to 3 years. An analyst would say 30%, 35% for the next 2 to 3 years. Then maybe it may not be able to sustain that. So still continue at a high rate of 25%, then say 20%, 15%, and beyond 10 years, we just don't know, right? So then all analysts, fund managers, investors put a conservative number of 5 or 7% for the growth rate beyond 10 years, for example, which is the terminal growth rate. If you look at the actual terminal value in high growth stocks, you would value a stock much higher. So that leads us to a higher valuation. And there are many implications of it, which we can discuss.
Sure. So good terminologies that we have learned today: gorilla stocks and terminal value investing. Thank you for that. So Mihirji, let's understand more on terminal value stocks. So what creates terminal value, and how do you identify terminal value stocks?
Sure. The magic of terminal value gets created when 3 things come together: leadership, intangibles, and megatrends. I'll just elaborate a little bit on all 3 aspects. Leadership is intrinsic in the company that we are talking about. The company should be a current or potential leader in its field, and that encompasses all the traits that we talked about: dominance, resilience, management quality, etc. So that's, we should be able to see that the stock is going to be it's a current leader or will be a potential leader going forward for over the next many years. Intangibles is everything which cannot be measured physically, which is, it can be technology, it can be IPR, brands, culture, business models. Again, factors which are intrinsic to the company. And megatrends. We all know megatrends, like demographics, like democracy that way in India, digitization, China +1. So those megatrends which are not going to change in the short term. They are going to continue for a very long period of time. And we have identified 7 Ds, which we call India's megatrends. Is there on our website in our presentation. You can refer to those too. But when these 3 come together, leadership, intangibles, and megatrends, that's where the magic of terminal value gets created. These differentiated insights give us the power to optimize on all the 3 aspects of investing. And the 3 aspects of investing are buy, hold, and sell. People typically talk about buy and sell, but the maximum value is during the hold phase. Right. So this wisdom or differentiated insights that we talk about, first of all, they give us the courage and conviction to buy big. They give us the vision to identify stocks with high terminal value. So it gives the vision and the courage to buy big. So that's one. So it helps us with the buy decision. Second is, it gives us the patience to hold the stock for a long period of time. Because, we are talking about multi-baggers here, right? And multi-baggers are created not overnight, but over years, and they keep compounding. What typically happens is that if your conviction is not high to start with, you may sell early because you're not really looking at the terminal value.
Correct.
So stock goes up by 2 or 3 times, you may end up selling. You also may sell in panic in a volatile market. So stocks tend to fluctuate by 20-30% in any case. So that gives us the patience to hold the stock over a long period of time and not sell in a hurry. In fact, our philosophy may be called as buy and add, because we buy a stock with a certain conviction and a certain thesis. If that thesis pans out over the next few quarters or the next few years, we would continue to probably add to that position. So it gives us the patience to hold and add over a long period of time. And third, it also gives us the wisdom and the framework to sell, because we know exactly what terminal value and what thesis we started with. So if valuation became insane even compared to our own terminal value estimates, then we would sell. Or if the original thesis goes wrong, then we would sell, right? So it gives us the power to optimize on all the three aspects of buy, hold, and sell. And that's how we identify and use terminal value to add value to our portfolio.
I think this is precisely the reason why people should not invest directly and why people should choose to go with a mutual fund, because there is so much thesis which is dependent on choosing a mutual fund, right? So talking about my favorite topic, China plus one, according to you, what do you think, which is the industry that is going to get benefited out of China plus one theory? A lot.
China is, as you know, the world's largest manufacturing economy, manufacturing country. To put things in perspective, India's total manufacturing GDP is about $500 billion, right? China is about $5 trillion. It's 10 times our size. US is $2.5 trillion, 5 times our size. Europe is 6 times our size. The total world is about $10 trillion. So if 10% of Chinese manufacturing has to come to India, India needs to double its capacity. And if 10% of the world wants to come to India, we'll have to triple our capacity. And this is across sectors. It's not across one or two segments, whether it's electronics, automobiles, chemicals, pharmaceuticals. China accounts for, in some cases, 80, 90 or 100% of production of a lot of components.
Correct.
So I think as far as the manufacturing theme is concerned, it's across sectors and in size, I would say.
So you're personally very bullish about manufacturing as a sector?
Absolutely. One D that we talked about is demographics, right?
Right.
India is going to add 20% of the world's workforce incrementally in the next 10 to 20 years. Out of every 100 people being added to the working age population in the world, 20% of them will come from India. And this, again, is demographic. It can't be undone in a hurry. China is going to lose workers. Population is declining. Europe, same thing. Right. Japan is also declining. US will remain flat. So the only regions where you will see working age population increase will be in India and Africa. Okay, so manufacturing has to come. The flip side is that it means that we are going to add 80 lakh to 1 crore working age people every year. So you need to provide jobs for them.
Right.
And these quantities of jobs cannot come from services, IT services. At best, they can provide a few lakh of jobs every year, IT services, right? The quantity or bulk of jobs has to come from physical work, blue-collar job, construction, manufacturing, infrastructure, building, etc. So it's not only a potential plus for us, but it's a necessity, I would say, that we need to create physical assets and manufacturing capacity in India.
So you mentioned about 7 Ds, demographics and democracy being a part of it. Can you also brief us more about the rest 5 Ds?
Certainly. So these are part of the mega trends that I think are going to drive India for the next 10, 20 years,
Right.
Very long-term trends. Out of these 7, 3 are kind of old. In the sense, they've always been there. As we discussed, there are 7 Ds which I believe are very long-term in nature, which drive India's growth, which are likely to drive India's growth for the next 10 to 20 years.
Right.
You talked about democracy and demographics. And the third one is deregulation, which we did in 1991, basically dismantling of the license quota Raj, bringing down tariff barriers, reducing duties, etc. Privatization began at that point in time. So these 3 are very strong and they have been there for a long period of time and we benefited from those. But I think in the last 5 to 10 years, 4 more Ds have come up. And those 4 D are, one is diversification of manufacturing away from China, the China plus that we talked about. Second is digitization. The kind of revolution that we have done by using the Jandan, Aadhaar, mobile, system is revolutionary, never been done in the world before. It's driven cost of financial services, social services down to absolutely low levels, and we are the most efficient in terms of speed and transaction of social services as well as financial services, which is actually getting a lot of people into the financial inclusion bucket. So the hitherto unserved portions of society are now suddenly become bankable. They are eligible for loans and they are getting government services and subsidies, your Manrega benefits directly to their accounts, which was earlier a huge source of leakage.
Right.
So this digitization is another big trend that is helping us, and it's actually rapidly taking a lot of people out of poverty. The third is debt. By debt, I mean the capacity to take on more debt. India as a country, corporate India, and households of India are amongst the least leverage in the world. So when we want to grow, if we want to continue to grow, equity capital is required, but debt will also be required, and we have the capacity to take on more debt. So debt is again a plus for us because we are, as I said, amongst the least indebted countries in the world. And the fourth, I call dynamism, which is again something which was not there in the last, before say 5 to 10 years. Earlier, if you wanted to start a small business, the only source of funding could have been a bank loan. And if you went to a bank, they would ask for collateral. Obviously, he's an entrepreneur, he doesn't have collateral, that's why he's asking for a loan. So it was very difficult to get risk capital for an entrepreneur who had some ideas. Now I think because we have a certain strata of society who has created immense wealth, across large ticket as well as small tickets, for an idea which requires say 1 crore rupees, there are enough number of people who can write either 1 crore check directly, or 10 people come together and write a check of 10 lakhs each, and there is, for an idea, there is money available to experiment with the idea.
Right,
which was not available. The angel investor ecosystem, the VC, the local domestic VC ecosystem. Earlier there were VCs, but they were all global in nature, who could not really go down to the real small ideas. So that has unleashed a lot of innovation in businesses. Even technological innovation is happening at a smaller level because of that. Thousands of startups are happening in India. And more importantly, I think it's changed the mindset of the youth. So I think that whole mindset shift is also something which is more important. So these are the 7 Ds which I think are going to drive India's growth for the next many, many years to come.
Now, when you spoke about debt-taking capacity, as you rightly mentioned, we as Indians are still under-leveraged in that part. How are we compared to China, US and our other peers?
Oh, the Western world debt to GDP is more than 150%.
Oh, is it?
Right. And India is still probably less than 60%. So we have, as I said, a long runway to take on debt. Absolutely.
Great. So is there any theme that you're working on, or there are a number of themes that you're working specifically for this Flexi Cap Fund?
Certainly. So our investment themes that we like, basically stem from the 70s that we talked about.
Right.
The first theme that we like is consumption and financialization. Second is physical asset creation. And third is digitization and technological disruption. I'll talk about the first one first. Within consumption, I would say the highest or the premium consumption is likely to grow much faster. Okay. And that's because in the demographics that we see, the highest income category will see the highest percentage growth. The second highest category will see the second highest percentage growth. So we expect between 2018 to 2030, the highest level income earners size will grow by almost 4 times. The second highest will grow by almost 3 times. And that would lead us to the preferred sectors, hotel, leisure, tourism, high-end food retailing, high-end retailing, high-end cars, real estate. So these are the themes that emerge, or the sectors that emerge when we look at these megatrends of democracy. Financialization, as people get richer, they save more. When they save more, they automatically go to more financial assets. More financial assets means flows to equities. So financialization is part of the same demographics that we talked about.
Right.
In physical asset creation, again, is driven by the whole China Plus One theme. And plus, when you talk about manufacturing, you require infrastructure to support the manufacturing.
Correct.
And when you are creating that infrastructure and creating those jobs and income levels, more real estate gets sold. So we are talking about manufacturing, infrastructure creation, and real estate as high growth segments because of, again, the mega trends that we are seeing. And digitization, we already talked about how this whole Aadhaar and ONDC stack will continue to disrupt and create more and more opportunities for the Indian consumer and the ecosystem of innovation.
Okay, great. Yeah, when you spoke about demographics, we clearly see there is a trend of lower class graduating to a lower middle class, then to a higher middle class, and then apparently to the highest class that we have in India. So the pyramid is actually turning upside down now.
Absolutely. The pyramid is shrinking at the base and increasing at the top. Absolutely.
Amazing.
In fact, you're not only talking about percentage of population shifting, but the absolute numbers in the lowest income category reducing year after year.
And this will be one of the major factors which will contribute to consumption growth of India.
Absolutely. So we are broadly, as a country, in terms of consumption, where China was in 2005, 2007. Right. And if you look at the per capita consumption of many items, it is at those levels. China doubled its per capita GDP in about 5 years. We'll probably do it in about 9 years.
9 years from now.
9 years of now, yes.
That's a nice figure to have.
So the other thing to understand about the Flexi Cap category is that the choice of stocks is large, right? If you look at the investable universe that we talked about, about 900 to 1,000 stocks, the market cap distribution within those 900 to 1,000 stocks is about 70-30. 30% of the market cap is in stocks which we consider as high growth segments, are in those high growth segment stocks, right? 70% are the others, normal segments, you can call them, but 30% of the market cap is in high growth sectors and segments. Within that 30%, if you look at the breakup, almost 70% is in mid and small caps and 30% is in large caps. Number of stocks wise is half and half, approximately 480 on the high growth, 450 on the normal segments. So, if you really want to participate in the higher growth segments, you have more options in the mid and small cap segment. That's why the Flexi Cap approach is a good way of balancing it out, de-risking your portfolio, ultimately, arrive at a portfolio of 40 to 60.
Okay, great. So if you had to summarize, why should one invest in Trust Mutual Fund, Flexi Cap Fund, NFO?
A good question. See, as we discussed, India is a growth market, right? And investors and analysts can significantly underestimate the potential in these high growth stocks and sectors. And when India is a high growth market, there are sectors which are growing even much faster, as we discussed. So our approach of terminal value investing, our framework of leadership, intangibles, megatrends, and our differentiated insights basically offer a unique approach, I would say, to investing, right? And it allows us to ride the full chain of buy, hold, and sell in the investment cycle, so to say. So, and as we saw again, alpha generation is created by stock selection, and there is ample scope for stock selection to differentiate and to create significant alpha. And our focused approach of 40 to 60 stocks in the Flexi Cap Fund again helps us to create that alpha.
So Mihirji, all the very best for the launch of your first NFO in equity. I'm sure there have been a lot of NFOs that you have done in the debt funds, but since this is being your first equity NFO, I'm sure the entire team is very excited for it.
Thank you so much. Yes, we are all very excited and look forward to your participation also.
Certainly, sir.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.